But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number, look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make 1,000,000x returns. The world doesn't work that way. And so therefore, I think we've got two odds now is, does this look like a more normal cycle? What that means, I don't even know anymore, but let's say 250,000 Bitcoin.
The CEO of Real Vision and a former Goldman Sachs executive, Raoul Pal, has once again provided insights that are attracting attention at one of the most critical junctures in the world's financial markets. Given how quickly the cryptocurrency ecosystem is changing, Pal provides a unique perspective on where the market cycle is at and where it is going. Pal's macro experience illuminates the possibility for extraordinary market swings as Bitcoin, Ethereum, and other prominent cryptocurrencies rise in value. He recently discussed important trends, upcoming milestones, and important dates for 2025 that every investor should be aware of in an interview with the New Era Finance podcast. Pal provides a roadmap for navigating what he refers to as the golden era of digital assets, including everything from his predictions for the next cycle peak to how macroeconomic factors will influence the adoption of cryptocurrencies. In this video, we'll examine Raoul Pal's most recent discoveries, his predictions, and what makes this cycle unique. Please like this video, subscribe to the channel, and enable notifications before we begin.
The issue is people have this anchoring bias on price. So they think 100 is more expensive than 1. But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number, look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make 1,000,000x returns. The world doesn't work that way. It works, Bitcoin is really the anchoring for the whole space. And over time, right, this space is a $3 trillion asset class today. If I extrapolate the trend rate of growth of adoption or price or market cap, you get to somewhere like 100 trillion by 2034, 10 years. So we're only 3% of that journey.
Mm-hmm.
So is it expensive or not expensive? It's probably very cheap. And at every point, and I've been around this cycle, I've been in crypto since 2013, everybody thinks, oh my God, I'm paying the high. And when you look back, when I paid the highs at 200 back in, well, it actually went up to 1,000 and went back down again. Back in 2013, I'm like, I paid the highs. And then I look back now and it's 100,000. That's the thing about exponentiality. People don't understand. They see the cyclicality, but they don't understand the secular exponential trend.
How long can it still go up as fast as it went? Like at some point you've got the exponential curve and your yields will just go down along with it, right? Because markets expand, markets keep on expanding.
Yes, so for Bitcoin, that'll become a very real thing earlier.
Mm-hmm.
But for the entire space, if it's going to 100 trillion and it's only 3 trillion today, will Bitcoin dominance be 50% of a 100 trillion market? No. Where will it be? Where will it settle as an asset class? We don't know. But let's say it'll have the equivalent or larger than gold whenever gold is at that stage. So let's say it's 30 trillion. So there's the 70% that's going to make an extraordinary amount of money.
Mm-hmm.
So I think the S-curve applies to the whole space overall, but the returns are still relatively high to come because we're still pretty early in most of this. And we see that over time. So Bitcoin's returns are coming down. ETH was higher, still is higher, but it's coming down. Solana's higher, but will come down next cycle. SUI or whatever's coming up this cycle, it will still have a couple of acceleration cycles, then it slows down. But what are we going to argue about? that the returns have gone from 150% a year to 60% a year. I mean, this is la-la land in finance, right? Nobody gets given these opportunities. What is a harder thing is why even start a business? Because I don't know almost any business that consistently generates between 50 and 150% a year returns. And you actually don't need to do anything. You just need some capital.
According to Raoul Pal, digital assets and cryptocurrencies represent the greatest macro potential of our time. According to him, this area is a force for change in international finance and technology, similar to the early internet, but with much bigger ramifications. Raoul claims that strong network effects are driving the exponential expansion of digital assets as more people, organizations, and developers join the ecosystem. New financial systems such as tokenized assets and decentralized finance, DeFi, are emerging as a result of this quick adoption and have the potential to upend established sectors. Raoul also describes how the macroeconomic factors of the present day, including inflation, low interest rates, and growing debt levels, make cryptocurrencies a desirable substitute for fiat money and traditional banking systems. While Ethereum propels the next wave of innovation through Web3, smart contracts, and decentralized applications, setting the stage for a digital revolution, Bitcoin, for instance, serves as a buffer against inflation and currency devaluation. According to Pal, the cryptocurrency sector is poised to develop at the quickest rate in history, reaching a $100 trillion asset class. He encourages investors to seize this enormous opportunity and closely monitor significant turning points in 2025 and beyond. But that's not all. Let's get back and hear what Raoul Pal has to say.
Ask most people who were in last cycle, and that was their first cycle, they have tremendous PTSD. Because they looked back on the 2017 cycle, and 2017, the market peaked in March before tax season. It then corrected, so it peaked at 2000. It then kind of corrected, and then it went up. It went up 10x in 4 months.
You had the China correction in between as well.
And so last time, I also thought, okay, we saw the tax season correction, then the rally back up. It was a big correction, down 50.
Mm-hmm.
Then it shot up, and it's like, okay, it's going to be 2017 again. And it wasn't, because the central banks would start to withdraw liquidity, and the business cycle had been brought forward by the massive liquidity was starting to come away, and that was the end of that. So this time, when you go on X and you see people, they are so PTSD'd by that I think that many will sell tax season March and then get trapped out.
Mm-hmm.
And then they'll expect an early peak, and maybe it does peak. From my liquidity work, it still suggests that it peaks at the end of the year, towards the end of the year. But it depends what happens to liquidity. But if that is the case, I just think the risks are here. And then the risk is 2026 is the people who then sold out, maybe they screwed it up and maybe they got out like I did in 2017 way too early. You then try and buy it back, and you end up buying back at much higher prices, which is what happened to me. I ended up buying back in COVID in that crash, and I got in at 6,500, but I'd sold out at 2,000.
Mm-hmm.
And I'd done the job. I sold out into strength and bought into weakness. Difference was, in a secular exponential uptrend, the difference between that peak and that trough was like this.
But is the macroeconomic framework going to push Bitcoin and crypto further ahead this time than in the previous cycles?
We can't tell, because liquidity is actually the dominant factor.
Mm-hmm.
So right now, we look at the business cycle using the ISM survey. It's below 50, which means the manufacturing is still contracting. So, okay, we're nowhere near tightening financial conditions. They did tighten because the dollar went up and rates went up, but the Federal Reserve and the governments need to change that because we need liquidity in the system. So even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to that tends to be a rolling top, and crypto tends to have a rolling top around that. So I think it's longer than people imagine. So it's later in the year. Because people are so scarred by last time around again. And if I look at it on a probabilistic basis, when we took off so aggressively in 2023, I'm like, okay, look, there is a chance that we front load the cycle. But then we had a 8-month correction, and that kind of put it back on track. And so therefore, I think we've got 2 odds now. Does this look like a more normal cycle? What that means, I don't even know anymore. But let's say let's say 250,000 Bitcoin? Or do we get something like 2017 and 2013, which is something a bit wilder? And I think the probability has gone up for me of that. But, I don't make predictions on this stuff because it's pointless and you just get trolled on the internet for making predictions. But probabilistically speaking, from what I know today and what I know about liquidity and the regulations and everything else, the probability is that we're going to get a more violent upside cycle with lots of volatility in the middle. Like, liquidity has been falling for 2 months now, 3 months. It's fallen quite sharply. And that's whether you use Global M2 or whether you use our Global Liquidity Index, Total Liquidity, that we produce at Global Macro Investor. It maps really well on Bitcoin. Now, these correlations don't last forever in a perfect form, but it's been perfect. And it would suggest that the market peaks sometime December, end of the year, early Jan, and sharply corrects, which is exactly what happened last time Trump came in. When Trump got voted in, the dollar screamed higher, rates went higher. He actually came in, rates went lower, the dollar went lower.
Raoul Pal's observations offer an insightful perspective on the current Bitcoin cycle by mixing historical lessons with a review of contemporary patterns. In his reflection on the 2017 bull market, he draws attention to the fact that many investors suffered from psychological scarring as a result of having violent falls after experiencing rapid gains. Before significant sell-offs during tax season, which were exacerbated by events like China's crackdown and central banks withdrawing liquidity, Bitcoin surged tenfold in a matter of months during that cycle. Many investors have become extremely cautious as a result of these experiences, and some want to sell early in current cycle in order to avoid losing out on potential future gains. Raoul highlights that the primary factor influencing Bitcoin's price movement is still liquidity. The previous cycle's bull run was reduced by central banks' tightening of liquidity. This time, whether this cycle lasts longer than anticipated will probably depend on a number of variables, including financial conditions, manufacturing activity, and global liquidity levels. Raoul's liquidity models indicate that, although significant corrections are unavoidable along the road, the market may peak at the end of 2025 and possibly roll into early 2026. Understanding how psychological, macroeconomic, and liquidity issues interact is crucial for navigating this market, as Raoul Pal's analysis makes evident. The key will be to be patient and knowledgeable, regardless of whether this cycle brings about tremendous surges or steady growth. Please remember to like this video, subscribe to our channel, and click the notification bell for more in-depth analysis and market updates if you thought these insights were helpful. Thank you for watching, and we hope to see you in the next video.